All right. Well, good afternoon, everyone. First of all, I'd like to extend a warm welcome to all of you to this online event. It looks like we've got a good group on, and folks are still coming in. So we really appreciate that. My name is Les Young. I'm the Business Development Manager with TradeLog. And I think I'm just as excited as you are to hear this presentation. We're going to cover a topic on wash sales that I think everybody is starting to think about right now. And if you're not thinking about it right now, you probably should be. But before we get into our presentation today, just some housekeeping items. And take a look at the slide here too. There's some important information on here. Basically, we want to remind you that you consider what's presented with your own circumstances. We're not going to offer you necessarily tax advice that you would hold us to. We're not responsible for the decisions that you make, but please keep that in mind with regards to the information that's going to be presented. So I want to introduce you to Jason Derbyshire. Jason is our resident wash sale expert. Jason's also the director of business operations at TradeLog. So Jason, how long have you been working with wash sales now?
Oh, let's see. Good question. 2007 is when I started really working with wash sales here with TradeLog. So it's been 13 years, long time, dealing with wash sales.
Okay, very good. Now you've done a number of videos and web content on wash sales, and I'm sure some in our audience have already seen. But what's in store for us today?
Well, first of all, thanks for again to everyone who's joined today, and it's good to definitely be on the webinar. And thanks for that intro, Les. So we're going to talk specifically today about taking control of wash sales and some of the disasters or dangers that wash sales can pose, especially this time of year. December, January is the time of year when we want to think about our wash sale planning, look at the implications of how wash sales are affecting us. That's going to be our focus today. I know I was looking over the registration. Good to see a big crowd that we've got attending and who registered as well. And some of the questions, some of the comments that were made as you registered about wash sales were the whole gamut. And I am going to tell you that in the time we have today, we're going to try to keep this into an hour or less. There is no way we're going to be able to discuss all the mechanics and details of wash sales because there's a lot more that we could discuss. So we're going to kind of focus on this theme of taking control. And if you have further questions at the end, I'll talk a little bit about how we can help you answer any other questions you have. I think that I might want to start with just a basic summary. What's a wash sale? If you have no idea what we're talking about, we talk about a wash sale. The wash sale is really a term defined by the IRS and the IRS wash sale rule, a rule that's been part of the Internal Revenue Code since I think 1925. So it's been around for quite a while. But in its simplest form, I kind of tried to break it down for you here on the screen. When you have a trade that results in a loss, if within 30 days before or after that loss, you replace the trade, then the IRS says that's a wash sale. And the result is you cannot take the loss. Instead, the amount of that loss is put into the cost basis of the replacement trade. Now, there's a lot more details involved with this, particularly that word replace. What qualifies as a replacement trade? We can get into things like substantially identical securities, unequal shares, stuff like that. But I just put a really simple example here at the bottom. Say on December 15th, you sell 100 shares, you have a loss of $200. December 29th, you buy 100 shares, the same security, you buy those back. Well, it's within that 30-day before and after window. So the result is you can't take that $200 loss. That was a wash sale. But instead, that $200 is added into the cost basis of that replacement position. So that cost basis went from $10,000 to now $10,200. So that's the basic fundamental aspects of a wash sale adjustment. Now, like I mentioned, there's a whole lot more that's involved with that, and some of the things we will talk about as we go through our discussion today with the wash sales, but just wanted to kind of break that down. Now, also today, we're going to talk about the term traders. When I talk about a trader, sometimes we get different terms with it. We're talking about someone who is an active investor, they're day trading. We're not necessarily talking about the status, trader tax status. I will discuss that later in the presentation, but a trader is just, in all practical terms, someone who's doing trades. And whether you're a very active trader, whether you're day trading, or whether it's more of a hobby for you, the wash sale rules can affect you if you are reporting as capital gains and losses your trading activity. And that's what we're going to focus on. And as I mentioned, we'll talk about trader tax status a little bit later. So why should traders care about controlling wash sales? That's what we want to answer first. What's the big deal with wash sales? Does it matter? Well, it does, because we've got some real life examples that can help you to see the repercussions that wash sales can have, sometimes really disastrous. For example, meet Vanessa. Vanessa is a trader. She is a customer that I worked with personally in the last couple of years. Vanessa, in one tax year, realized losses around $66,000. Now, I'm not going to get into her trading and all that. Vanessa will quickly tell you it was a bad year. She was learning a lot. She had a lot of losses. But if that wasn't bad enough, when she got her 1099-B from her broker, it showed a taxable gain of $166,000. So what that means is, even though she lost $66,000 in that tax year, according to the 1099-B, she needed to pay capital gains tax on $166,000 in gains. Bob Green, our friend over at Green Trader Tax, I think he kind of coined the phrase phantom capital gains. I like that, because that's what we see here. She's having to report capital gains that didn't exist. She actually lost money. Why? How did this happen? Well, the 1099-B had calculated wash sale adjustments and deferred a total of $232,000 in losses to the next year. So you think back to that sample that I gave, those little adjustments that move forward to the cost basis. Well, in her case, those adjustments resulted in $232,000 of losses throughout the year that she could not take. They were passed on to the next tax year. And so for her, that meant she was going to have to actually pay taxes when she lost money, and she was not very happy about that. Consider another example. Stanley is another customer who realized a loss of $130,000 for the year. Now his taxable loss, though, after wash sale adjustments, was adjusted to $71,000. Now, for Stanley, it wasn't too big of a deal, because he still had a loss. It's not like he was having to owe Uncle Sam money on his taxes. But you notice that there is a big difference there. But here's the part that really hurt Stanley. He was also trading the same securities in a taxable account as he was in an IRA. And we'll talk a little bit more about this in a moment, but there's some specific wash sale rules that apply to IRAs that meant that $22,000 of his losses were not deferred. They were permanently disallowed. So pretty much it's like he just $202,000 for the year, but he had a taxable gain of only $170,000. Now you might be saying, well, that doesn't seem like a bad thing, and it's not. This is actually a good example of why traders should care about controlling wash sales. Richard actually used wash sales to his advantage. He had deferred over $82,000 in losses the previous year, because he had had a lot of losses in the prior year. But because of the wash sale rule, he was able to defer some of those losses into trades that were going to close in this particular. He still had some wash sales attached to more positions, deferred to the future, which is cool for him because he could use it in the future. So when we talk about wash sales, we're seeing it's not just a matter of always a bad thing. Wash sales can also be beneficial sometimes. And so that's what we're going to talk about when we talk about controlling wash sales, is how we can actually, use wash sales to our advantage. I'm going to pause for just a moment because I think some people are having some problems with Zoom. Nothing new. All right, let's see if that's a little bit better. All right, so we're going to talk about wash sale dangers now in a little more detail. We saw some examples. So a few of the particular dangers that we want to address. One is wash sales can snowball. So when you have a wash sale adjustment, a lot of times that may not be the So I'm actually going to cut my video here for a moment. See if that helps with the quality here of our Zoom. So the other thing that can happen is wash sales being attached to year-end open positions. Sometimes you've accumulated wash sales. They're attached to the year-end open position. And if you don't close that position by the end of the year, then it carries forward and to the next tax year. So it's a deferred loss. Another danger is in January. Trades that happen in January can actually cause a deferral that goes into the next tax year. And because the previous tax year is done and over with, there's not much you can do. You can't really fix those. So January deferrals can sometimes be nasty. Also, another side effect of wash sales can be changing short-term to long-term losses. So that's not always a good thing for us, because sometimes we want those losses to offset the short-term capital gains. But because of the snowball and because of some of the wash sale rules, you can actually take a loss that was from short-term trades and turn it into a long-term loss, which really doesn't have as much tax advantage in offsetting short-term gains. And then you have IRA wash sales that can be permanently disallowed. So those are some of the things. I'm going to touch on these more because I know you're probably thinking, well, we just went through those real quick. I'm going to look at some examples here in a moment. But the key with some of these dangers, and I love this graphic that we have with this, is it's kind of like an iceberg where a lot of the problem is often goes unseen. And too many traders, we find, especially new traders, they start out trading, they're learning the ropes, how to trade. And of course, they're going to have losses, but then they don't know anything about the wash sales or the implications until the tax year is over. And now it's time to file their taxes. And then they find out, whoa, this has had some big implications. So we want to help you to not be oblivious to those dangers, to see and be aware of some of these situations. And like I think Les mentioned at the outset, this is a big topic. We've had a lot of questions here at TradeLog this year about wash sales for a couple of reasons. Those of you who've maybe been trading for a while, we've heard a lot of people had losses this year. The market's kind of been all over the place. It's not a terribly bad thing, but especially back in the spring, there were maybe some unexpected losses. And so you need to deal with those losses, and you don't want wash sales to get out of control. And the other thing is we've seen a lot of new traders this year. I don't know why. People are at home with the internet and nothing else to do but trade, I guess. So they start getting into trading, and that's great. We've got some nice market volatility. It's really been a good market in many ways for trading. But unfortunately, some of these new traders know nothing about the dangers of wash sales. So that's why we really want to touch on this. So what I'm going to do is we're going to break down some of these examples here, starting with a wash sale snowball. What I'm going to do is actually switch over, and I'm going to share a whiteboard with you all, and actually just kind of go through some examples on the whiteboard of how these wash sales can affect us. So let's talk about the snowball first. So let's say that we have in January, we have a loss for, we're going to say, $500. So we have that loss in January, $500. But now we replace the trade in February within the 30-day window. So, we have a replacement Well, that $500 loss goes into the cost basis on the replacement position. But now let's say that when all is said and done, after that adjustment, we made a little money on that trade, but with the loss, we have a total of $400 taxable loss when we're done. And then we replace that trade again in March. We have another purchase. Well, once again, we have a wash sale adjustment that goes to that trade in March. And so this can continue, but the problem is it can also build, because let's say that trade in March resulted in a loss. And now we have a total loss of, let's say, $800. So what's going to happen if I replace that in April is now, once again, that loss is going to move forward to April. And if there's another loss, it can repeat over and over. Now, I'm just doing like about one trade every 30 days here, but many active traders are making hundreds, if not thousands of trades in and out of a position. And sometimes even with unequal buys and sells, you can get all sorts of complex scenarios where this chain reaction happens, and the amount of the loss that's being passed on to the next trade and the next trade continues to grow and creates this snowball situation like what we're just talking about here. And thinking back to the example we gave with Vanessa, that's what happened to her. You know, that snowball. I think she was actually trading Netflix that year, and it just, you know, she was in and out of Netflix. That was the main thing she was trading, and the losses accumulated and accumulated. She didn't realize that it had snowballed until it was too late, and there's that huge amount. So that's one of the problems when we talk about snowballs, the term that I coined with it, of the wash sales. Now, sometimes people want to know then, well, what can you do about that? You know, can you ever stop that? Well, the key is you have to somehow stop the chain. And you can do that by not trading for 30 days, that particular position or substantially identical positions. And that can break that chain, or just make sure to have trades that don't result in a loss. So more profitable trading. So that is where you have to, you know, be able to take some action to try to control that or break the chain. Otherwise, it can continue to go. In fact, I've seen some people that have had years of chains for the same security. You know, they're just passing on wash sales. And like we mentioned with the example of Richard, it's not always a bad thing because sometimes, you know, you can use those wash sales to offset future gains and it doesn't hurt you too bad. The next two dangers I want to talk about is the wash sales attached to year-end open positions and then January deferrals. And this is where I mentioned earlier, right now, December, January is a time to really be concerned about these wash sales that may affect you at the end of the tax year. Good chance you've had some losses and you've accumulated maybe a little snowball of some wash sales throughout the year. But now is when you need to know how that's going to affect you. For example, let's say that right now it's December 15th. I'll turn my pencil back on. So on December 15th, let's say as of today, you know, we have 500 shares open of whatever stock that we want to have. And it has a wash sale deferral that's attached to it. Let's say that comes to the amount of $2,000. So we have a $2,000 wash sale deferral that's attached to these 500 shares. Now these are open. So that means that this particular loss I cannot take in the 2020 tax year because those shares are still open. Now, if I don't close those shares until 2021, the $2,000 just got deferred to the next tax year. Now, whether that's good or bad, it can depend on my bottom line. Let's say that my net total losses for the year are only $1,000. We're talking little numbers here, but let's say I lost $1,000 total in net. Well, if I defer $2,000, what's that going to do? Well, we're taking $1,000 loss taxes, even though I actually lost $1,000. So that's kind of how a December position could affect us, or a year-end position. It's not necessarily something in December. I could have shares that I've held open since April. But if the wash sale is attached to those at the year end, once the year is over, there's nothing I can do about it. But there is something that could be done right now before the year ends with this. If I wanted to capture this $2,000, I could go ahead and close those shares. And that way I would be able to keep that loss in this particular tax year. So let's say I do that. Let's say that I captured that loss. I closed those 500 shares, and the result is, we're just going to keep it simple. The result's a $2,000 loss on December 15th. Well, now we have another situation, a possible danger. Remember, the wash sale rule says that if you replace that position 30 days before or 30 days after, it could create a wash sale and a deferral. So let's say, on January 14th, I make a replacement purchase for this particular trade. So we're going to switch over here, and on January 14th, we purchased 500 shares. Well, now I could trigger a wash sale, which means this $2,000 goes from 2020 tax year and is attached to the cost basis of the 500 I bought. So that means that $2,000 loss gets taken out of 2020 and is going to be pushed forward and deferred to whenever I finally dispose of those 500 shares from January 14th. So that's what can happen with the January position. Now, the kicker with January trades is you can't fix it. If I was to look right now, we're in December, I can maybe sell some positions or open positions. I could make some changes in my trading to try to take control of those wash sales. But once January happens, if I trigger a wash sale and I defer a loss out of 2020, it's pretty much, I'm stuck with that. And there's nothing I can do about it except for, take that loss in 2021 or whenever it is. So that's why you want to be aware of those situations before you start making trades in January. Now, the other things we mentioned, we talked about the short term becoming a long term. So sometimes the holding period can actually change on a trade as a result of the wash sale rule. So that can sometimes affect you in a negative way if you're trying to keep losses on your short term gains and losses, capital gains and losses, because obviously you don't want to have as much short term gains. It's usually a higher tax rate. So we want to try to change that. But I want to talk about the next one here, the last one we talked about, danger, which is IRA wash sales, because this is one that can be really, really nasty. The IRS, it's been several years now that they clarified this rule that if you have a loss in your taxable account, let me draw this out here. So we have our taxable account, all right, and then we have an IRA account. Now, the IRS says that if I have, let's say I sell shares of XYZ in my taxable account and I lost $500. Well, now if I replace those shares in my IRA within the 30-day plus or minus window, the IRS says this triggers a wash sale. And we have a wash sale situation. But here's the part that really hurts when it comes to IRA wash sales, because the IRS says you disallow that $500. So you're not allowed to take that in your taxable account, but there is no adjustment to the IRA trade. So you don't move the $500 to the cost basis of the shares you bought in the IRA. It's just gone. You permanently disallowed it. So it can be really nasty, and it can bite you if you have an IRA and you are trading the same security or substantially same security in your IRA account. So it can be a little nasty one that we like to make sure and highlight. And we'll talk a little bit later about how we can maybe control that.
Jason, so I'm just sitting here thinking, so how does the IRS know what I do in my IRA?
Yeah, that's a really good question. We get that question a lot, so I'm glad you asked that. your broker does not provide a report to the IRS. They don't give a 1099 for the IRA. So the IRS really doesn't know what trading activity you have in that IRA. And you're not required to send a report of your trading activity. So the only time it's really going to come up is usually if you're audited by the IRS, and it does happen. So we've had people who get audited, and the auditor wants to know everything. Do you have any IRAs? Non-taxable accounts. And if you answer yes, well, then the question could come up, well, have you adjusted for wash sales across it? And that's where there have been some specific rulings from the IRS over this very issue, where it was challenged in court. Hey, do you have the right to adjust a wash sale on a non-taxable account? And they have established it as a ruling. So some traders just simply say, hey, well, if they don't ask for it, I'm not going to do it. And again, that's personal decisions that we have to make when it comes to filing our taxes. But if the IRS was to audit, that is the potential there for an IRA wash sale. Great question. Thanks for asking that, Les. So now, how can this turn into disaster? Backtracking a little bit, we have these dangers, but it doesn't mean that wash sales are always going to be disastrous for you. In fact, I know some traders ask the question, well, how can I avoid wash sales? There's really, only one way to truly avoid wash sales, and that's is to never have a loss. Or if you do have a loss, don't ever trade the same or substantially same security within 30 days, but that's not necessarily realistic. Wash sales are going to happen. And this has kind of been our stance on our website, I think for like almost 20 years. TradeLog, we've mentioned this. Wash sales are going to happen. They're going to happen throughout the year. And a lot of times they balance themselves out if you are making some profitable trades. But there are situations where it can be potentially disastrous. And that's what we want to touch on here for a moment. Number one, if you actually are increasing your tax liability, which wash sales can do, as we mentioned, that could cause you to have to pay more taxes than you really should. It's not always a bad thing. Like the example that we gave with Richard, I think it was earlier, or no, Richard had that example where his losses were like 130,000 and they came down, but there was still a loss. So it didn't really hurt him. He could defer some of those. But if you're paying taxes, well, if you owe taxes on 20,000 in gains, but now you got to pay taxes on 40,000 in gains, that's kind of nasty. And one of the worst case scenarios is what we saw with the example of Vanessa, where you're upside down. You actually had a net loss for the year, but now because of wash sale deferrals or disallowed losses, you actually have to pay taxes. I mean, I don't know if there can be anything more painful than that when it comes to tax time, but having to pay taxes on money that you never even made. You actually lost money. And sadly, that has sunk many traders. That's why we have this graphic here of the ship sinking. We've seen it over the years here at TradeLog. Many people, they started trading, but because of wash sales, it maybe put them upside down. Now they had a huge tax bill. They had already lost money their first year trading, so they give up. In fact, we had a great comment from one of our longtime customers today talking about this webinar we're doing. He mentioned just how important it is. He said that he's been using TradeLog to really track his wash sales for over 10 years. And he said, if you want to stay in the game, you've got to understand how wash sales are impacting your trading. So it is important. But that kind of brings us to this next topic. What's involved in controlling wash sales? We've touched on the dangers. Yeah, it can really have an impact, but how do you control it? Many traders think that you can't. It's just totally out of control. Or one of the age-old things that I see and hear all the time is that you need to just stop trading for 30 days. Take a December vacation, extended Christmas, stop trading December 1 and start trading again in January 1. And that can work. If you're not trading for 30 days and if you don't have any huge wash sales attached to open positions, it can prevent you from deferring huge losses. But it's also taking an entire month of trading opportunities out of the picture for the year. So we want to focus on helping you be a profitable trader. So when it comes to taking control of wash sales, a few things that we want to touch on with that. First of all, focus on profitable trading. Uh, if you become obsessed with controlling wash sales, you're going to spend way too much of your time and energy trying to, look at, the wash sales. Did I have a wash sale today? What do I do now? For the most part, throughout the year, you probably don't have to worry too much about the wash sales. December and January, that's a little bit different. You need to look. But if you focus more of your time and energy on just making profitable trades, even if you do have a loss and you do have a wash sale triggered, once you've made enough profitable trades, it's going to balance out. So don't become obsessed with wash sales, is my word of advice. Next thing is to understand the potential dangers. And we just helped you with that. We talked about some of those dangers. And I know some of you are probably still going, wait a minute, I didn't get all of that. We'll talk later how you can learn more about those dangers and really understand them. If you understand the dangers, now you've got some knowledge that you can use. You can be able to avoid, a disastrous situation. And that's where this third bullet point comes into play. You may know the dangers, but now you need to understand how wash sales are actually impacting you, your bottom line. Right now it's December 15th, 2020. Do you know what kind of wash sales you've maybe snowballed over this year that have accrued and are attached to any positions you have open? Do you know what trades in the next 30 days could trigger a wash sale deferral, especially if it's a trade in January that might defer something to the next year? When it comes to IRAs, if you're trading the same or substantially same security in an IRA as you are in your taxable account, you're going to need to carefully monitor that to make sure that you don't trigger a situation where you have a permanently disallowed wash sale. If you know these things, you understand the potential dangers, then you can make smart trading decisions. And that's really what we want to help you to see how you can do that, to take control of your wash sales. And to do that, we want to help you to see some of the intelligent tools that can help with this. First of all, we want to talk about trade log versus the 1099B. Sometimes people, most all traders, they know they get a 1099B from their broker now. And they may think that that's all they need for their taxes. We often get the question, what's the purpose of trade log? Or does trade log just import my 1099B? What's the difference? So I kind of broke down a comparison, 3 key things especially. Number one, a 1099B is a report that only has to provide limited wash sale adjustments. And you think about it, 1099Bs are provided usually by your broker, your clearing firm. So their focus is on your trading and being a brokerage firm, not being your CPA, not doing tax adjustments. And the IRS doesn't expect the 1099B to have all of the tax adjustments that are needed, especially for an active trader or a very active investor. Specifically, the rules for the 1099B say that the brokers or clearing firms, they only have to adjust wash sales within a single account. They only have to adjust wash sales on identical tickers. However, the IRS says that you as a taxpayer have to adjust wash sales across all accounts that you have, technically even your IRA, and you have to adjust wash sales across substantially identical securities. And we have some information on our website about this. Basically, substantially identical, many take that to mean it can refer to contracts or options on the same underlying security, or sometimes different option contracts with the same underlying ticker that they're on. So your broker with the 1099B, they don't have to do those wash sale adjustments. Trade log is designed to do that comprehensive wash sale reporting, to identify all the wash sales that the IRS requires. The other difference, big difference between your 1099B and trade log is the amount of detail. And if you've ever gotten a 1099B from your broker and you had some, especially if you had some disastrous wash sale scenarios, you probably know what I'm talking about when it comes to lacking details. I'll give you an example of a 1099B. We're going to keep the broker anonymous to protect their identity. It's not their fault. Like I said, they're providing the rules. The IRS says, they're following the rules. The IRS provides the instructions of how they report. And pretty much like in this example, we see a call that in column 1G, there's all of these wash sale losses that are being reported. This first trade had a $4,326 wash sale adjustment. But here's the question: which replacement position was adjusted? With the cost basis adjustment, where did this $4,326 go to in terms of cost basis? There's absolutely no details on your 1099-B. So if you were to sit down and try to audit and check these wash sale adjustments, you're not going to find it. For that matter, if you were to look at your bottom line, all they're going to do is give you a total for column 1G, but they don't tell you exactly how much you're deferring to the next year, what securities it's attached to, things like that. The difference with trade log, I'm going to show you an actual trade log customer. If I run a report in trade log, particularly the gains and loss report, we will show you in trade log the details for your wash sales adjustment. So you notice here, the very first line number 5, there's a loss for $1,598.97. We make a wash sale adjustment and we tell you exactly where that adjustment's going. It's going, to line number 9. So this $1,598 has been adjusted into the cost basis for line number 9, which resulted in a loss. That also was adjusted to line number 11. Line number 11, the cost basis has been adjusted, but the process continues with those wash sales. So the details can really matter, especially if you were to try to audit and understand your wash sales and what's happening. Another big difference that we often see when it comes to the 1099-B and trade log is the wash sale window, the 30-day window. Remember I mentioned at the beginning, the IRS says you can replace a position 30 days before or 30 days after the loss, and that may trigger a wash sale. So what we tend to notice is most 1099-Bs that are provided by brokers usually are going to look first in the 30-day window moving forward. So they tend to move any losses forward in that 30-day window first. Now, the result can be that those losses are more likely to snowball because if you're moving it forward, well, it's just going to keep going. However, trade log takes advantage of the IRS rule because it says that you can also adjust that wash sale to a replacement 30 days before the loss. So trade log is actually designed to do that. It looks first in the 30 days before the loss to see if there's a potential replacement position, and it tries to move those losses backwards first. And in doing so, what we find is oftentimes it reduces how much those wash sales may snowball over the course of the year and can reduce the amount of deferrals. For example, you remember Vanessa? She was the example we talked about. She had losses of $66,000 in the year. Her 1099-B showed a taxable gain of $166,000 because of wash sale deferrals. Now, Vanessa used trade log to see, could it get better results? Now, a couple things trade log was able to do. Number one, the 1099-B was not adjusting across all of her accounts. She had 2 taxable accounts and an IRA account. So first of all, trade log made comprehensive wash sale adjustments across all accounts. But also trade log took advantage of that minus 30-day window and tried to move wash sales backwards first and across all potential replacement positions. And as a result, for Vanessa, her taxable loss went down to $17,000. So she didn't actually have to pay that huge tax bill on $166,000 in gains. So needless to say, she emailed and told me that she was doing cartwheels in her head, at least, when she saw the results, because she was really panicked about that tax bill. But that's the difference that it can make when you're using a software program, trade log, which is designed to really make those comprehensive adjustments and to use the wash sale rules to the full. Some might say, well, are we cooking the books? No, we're not cooking the books. In fact, those who've used TradeLog know that oftentimes we're generating a lot more wash sale adjustments than you may see on the 1099-B because, again, we're looking across all accounts, across substantially identical securities, but we do take advantage of those IRS rules that could benefit you, like moving it back in the 30-day window. Or, for example, like in Vanessa, I remember one example in particular. Instead of the wash sale moving forward to a trade in the same account, there was another trade in her other taxable account right around the same time. So the loss was able to move to that trade, which was closed out, and it helped keep more of the losses in the tax year. So it was an awesome result for Vanessa, and we've had many others who had similar results. So 3 tools in particular that I want to demonstrate to you about how TradeLog can empower you to take control of your wash sales. The gains and losses report, the wash sale details, and the potential wash sales report. Those are what we really want to focus on. So I'm going to switch over here to my example in TradeLog. And again, this is an actual TradeLog users file. They trade actively this year in their trading account. They've had close to 3,800 trades right up to yesterday. So all of those trades have been imported into TradeLog. Everything is up to date. And that's important if you're going to view how your wash sales are affecting you. You kind of have to keep things up to date. So this trader has done that. So first of all, as I already mentioned, the gains and loss report can really help you out because it provides details about your wash sales. You'll see that throughout the report. It shows all of the wash sale adjustments. It shows you the line that particular adjustment was adjusted to. So you can actually audit your wash sales. If you want to, you can go through every single page and look at all the adjustments where they're being made. And believe me, we have TradeLog users who sometimes do that, and they'll even sometimes have a question. I don't understand. Why is this not a wash sale? Or why is this a wash sale? And we'll try to answer that question. We can go through and look at the details and explain why. You have that history with TradeLog, and that can help you to understand how you're being impacted. The data that's on this gain and loss report, it's the exact same reporting that we would put on the 8949 for this particular trader. So if I was to run the form 8949, which is currently in draft because 2020 is not over. So I got to click through a few warnings here since it is a draft report, but the results on here are exactly the same as the gains and losses report, but they're in the IRS format, which again doesn't have much detail because all they do is in column G, we have a wash sale, but there's no detail where it goes to. But that's why the gain and loss report can really help you out. If you're looking at your 8949 from TradeLog and you're saying, well, why do I have a wash sale there? Open the gain and loss report and look at the details and you can find out. So that information can help you. But what I want to show you next is the wash sale details report. So we're going to do this from the all accounts tab. So we're looking at our complete trading history. This particular trader, he's got a taxable account, his trading account with Interactive Brokers, and he also has an IRA, a non-taxable account with a little bit of activity in there. So when I go up and run the wash sale detail report, what this does is it takes a snapshot right now for this tax year, for 2020, as of today, what's going on with my wash sales. So you notice up here at the top, we have 2 columns. First, we have any deferrals that are attached to positions open at year end. And then the second column is any deferrals that are caused by trades in January. Now, obviously, we're not in January yet, so there's nothing listed there. But once this trader once we get into January and he continues to import his trades, it will show any deferrals that were triggered by a January trade. So right now, we're showing a total of $5,816 in losses that are being deferred. In other words, they happened in 2019, but right now they're attached to positions that are held open. So if this trader does not close out these positions before 2019, that $5,800 is going to get deferred to the next year. So that's one part of this report that can be helpful. The other thing is it tells me any wash sales that have been permanently lost to the IRA account. So he is tracking his IRA account trade history, and we see that there was a put contract that triggered an IRA wash sale. And it was kind of painful, really. 15, almost $15,700 in losses that had occurred in the taxable account, but are now permanently disallowed. He doesn't get to take them in 2019 because there was that trade in the IRA. So the wash sale detail report is going to give you that snapshot of what happened, especially for the tax year. Right now, the tax year is not over, so it tells me where I'm at up to this point. And then in the subsequent pages, page 1 gives you that summary. Page 2 is basically the gain and loss report, but it's only going to show you the trades that are involved in those wash sales. So you have all the details. So if he wants to go and look and say, well, that IRA wash sale, where did that happen? What was behind that? You can go look it up. It also shows the open positions. So here's all of the positions that he opened 2019 into 2020 for EPD. And some of these have wash sales that are attached to them. We can see it up here. Line 22 says there's an adjustment that goes to line 7, which is still open. So it kind of helps us to see what's going on. Excuse me, that's ENB. So wash sale detail report can help you with that and understanding the impacts on wash sales. But the next report I want to show you is what I think one of our most powerful when it comes to controlling your wash sales, and that's the potential wash sale report. Now, this report is only going to help you if you have all of your trade history imported up to today, and you really need to run it in the All Accounts tab. So you're looking at any potential wash sales across all of your accounts. There's 3 sections to this report. And what this report's going to do is give you kind of the information, the tools to know right now what's going on with wash sales and what could happen in the next 30 days. Section 1 is wash sales attached to open positions. So this is the same information that was on the wash sale detail report, but what's helpful here is it tells you what the underlying security is, how many shares or how many contracts are involved with the wash sales. If it's a long or short position, it tells you the amount, and it tells you the date that position was opened. So then you kind of know, this is usually the last date. So right now, for example, for ENB, I've got 26 shares that are open, $28 total attached in wash sales. That last one was opened on October 8th. Maybe not too significant, but down here for like MPLX, I have $3,000 in wash sale adjustments attached to 2,000 shares that are currently open. So if I want to capture those losses in this tax year, I might choose to close those 2,000 shares. That way I realize the loss in 2020 and can be able to use it, to offset any gains that I have. Now, you don't automatically need to do that because it just depends on the big picture. Where am I looking for the year? What's my taxable gains and losses? So you want to look at that, but this tells you the information you need to know, and it tells you what account those trades are in. If you have multiple accounts, it can really help you out. You can then drill down and know exactly where that trade is at and what needs to be done. And we explain this more. You can click on the link. It goes to our support center. We give some examples how to use this. Section 2, this is something unique to the potential wash sale report. This section is going to show you any losses that you've had in the last 30 days that could turn into a wash sale if you make another trade within the 30-day window. So you see there's two put contracts here that are open short, and then there's also a total of 400 shares that he has open long for WFC. So what this is saying, for example, for these put contracts, these are closed now, but if the 30-day window here ends on December 23rd, so if he was to open to guide my decisions. If I'm thinking, well, it's getting close to the end of the year, I don't want to trigger more wash sales. I might look at this and guide my decision making. But obviously, right now, there's only really two securities, two tickers that are in question, STAG and WFC. So my other, securities and stuff that I'm trading might not be an issue at all. But this kind of gives me that information to make those decisions. The last section of this report is wash sales lost to the IRA. And so this particular section helps us to understand if you have an IRA account, wash sales that have occurred within the last 30 days, and gives you the power to potentially reverse that. Now, he's done really good. He doesn't have any in the last 30 days. So what I did is let me open up another. I altered his record a little bit here and I added a trade in his IRA just to make it look like he traded the same security. So now if I run the potential wash sale report, we're going to see, oh, no, we don't see it. Maybe I didn't add that cookbook. I thought I did. Let's see. Must not have saved that trade. So, okay, let's say, I'm going to go in here and do that. So I'm going to just add a trade for today in the IRA. Let's say he buys shares of is it WFC that I need to buy? I think so. See if I can create this for you all. I'm just going to create a fake price and let's see what happens if we have this. May not do it. Yep, here we go. So now what's happened is I have wash sales that are going to my IRA account. And if I don't do something by December 17th, these are going to be permanently disallowed. Now you might say, well, wait a minute, if you already made the trade in your IRA, what can you do? Well, what I can do is purchase more shares in a taxable account. Because what TradeLog is always going to do is first, it's going to look for any possibility to adjust the wash sale to your taxable account and do those first. And it only adjusts to the IRA if there's just no other options. So if I was to go in right now to the taxable account, and I'm going to today make a purchase for WFC, I'm also going to do same amount, 500 shares. Just going to throw something in there. And now let's run the report and see what happens. Now there's no longer any wash sale going to the IRA in the last 30 days because I was able to basically create a position in my taxable account to divert that wash sale. So that's a trick that some traders will do if they are trading same securities or substantially same securities in an IRA and a taxable account. You can use this report. And if you do see, oh man, I can't believe I did that. I created an IRA wash sale. Well, just simply create a position, now obviously it's got to be a real position. You execute that trade with your broker. But then once it's imported into TradeLog, TradeLog is going to put the wash sale to the taxable account first and help avoid any IRA wash sales. So again, as I mentioned, this report has some links where you can learn more how to use it. That was kind of a quick overview of the report, but these are some of the tools that can help you in TradeLog to know how wash sales are impacting your bottom line, and then take the necessary steps, the decisions with your trading to avoid potential disasters. Now, before we get to the end, I do want to take just a moment to talk about trader tax status. And I know some of you asked about this when you registered. If you are a serious trader, you're making trading your business, it's not just a hobby, you may want to consider trader tax status, which is an election, Section 475F with the IRS. And it basically is telling the IRS, I'm a professional trader. And it allows you to take your gains and losses from your trading, and instead of those being handled as capital gains and losses, you're able to treat them all as ordinary income, basically like a business. And wash sale rules don't apply in that case. Now, you may still have to deal with wash sales if you have like an investment account or something, but your actual trading wash sale rules don't apply on Section 475F election. So that kind of just gets rid of the whole wash sale headache if you're a serious trader. Now, there are pros and cons to this. You've got to be a qualified trader. And I'm not going to go into all the details, but you may want to consult even with a tax professional. We strongly recommend it. Our friends over at Green Trader Tax, that's their specialty. They've got a lot of great information even on their website. But you need to make sure that you actually qualify for the IRS election. And it's not always a good thing. There are some negatives too that can come from trader tax status. But if you are a serious trader, you're making this, your business in essence, I definitely recommend checking out trader tax status and whether that might be for you. When you elect trader tax status, you actually change to mark-to-market accounting method, or MTM for short. TradeLog supports that. So if you're using TradeLog and you do decide to switch to trader tax status and elect mark-to-market, the software is able to make all of those adjustments for the change in accounting method. It's able to keep track of everything with your wash sales. And the Section 481 adjustments you have to make it the first year. All of that's handled by TradeLog. So it's still a powerful tool that can help you. And if you do have an investment account still, in TradeLog, you actually can have, just like in this example right here, we have a trading account, we have an IRA account. I can also add an account for mark-to-market. So you can still maintain your investments and your actual trades, the trader tax status, all within the same file in TradeLog. And that allows you to use some of our other great performance reporting tools, keeping all your trade history in one place. So definitely worth checking out if you're serious about trading. So kind of getting to the end here, just a little summary, what we talked about, a few key takeaways for you. As we discussed, wash sales have the potential to have disastrous results. They're not all bad, but there is potential for some real disaster. And you can take control of your wash sales with knowledge and tools, knowing the potential risks that are there, knowing how wash sales are impacting you. Using tools like TradeLog, you can have the reports. And of course, you're going to have to sit and consider your situation and what's best for you, but you can take more control over your wash sales. And that's what many of our customers have done now over the last 2 decades that TradeLog has been in existence. Some key takeaways that I recommend for you. First of all, know what you're going to use to calculate your wash sales and your trader taxes, especially if you're new to trading. If you just started trading this year, you definitely want to know what you're planning to use. Don't wait until April to say, hey, how am I going to file my trader taxes? Figure that out now. If you're going to use a tool like TradeLog, I recommend you start using it now. That way you can see the complete picture, what's going on before the year ends. And that's the second bullet point. December and January, this is the time of year when you need to know what's going on with wash sales, any deferrals that you have. Use the potential wash sale report. For many traders, the rest of the year, you don't need to worry too much about wash sales. But December and January, I definitely recommend know where you stand. If you're trading in an IRA, same security as a taxable account, that's a little bit different story. You may want to monitor that throughout the year just to make sure you don't trigger any IRA wash sales that could be potentially hazardous. And like I mentioned, if you're really serious as a trader, consider trader tax status. Maybe that would be a good option for you. So that's kind of the summary of what we've talked about today. I hope this information has been helpful for some of you. I know many of you commented in advance that you really needed to understand more what's going on with wash sales. You needed to figure out how to control some of your losses. So I hope this has helped you with some of the tools that you needed. We recorded this session, so everyone that registered will send out a link later, the recording. So if you need to watch something again, feel free to do that. And that will help you out for sure.
Hey Jason,
Yes.
got a lot of questions, obviously, great presentation, but where do you suggest people go if they need to learn more?
Yeah, good question. So of course, our website with this section on the IRS wash sale rule, because that's going to kind of give you, a breakdown. What is a wash sale? the different rules that apply for brokers, for traders. We give examples on the effects, like I just talked about, how to possibly avoid wash sales. So this is going to be some good reading for you to try to understand the basics of the wash sales. But also check out our YouTube channel, which is TradeLog Software is the channel name. And we link to it in different places as well on our website. We've got a lot of information that we've done over the years. I've got some videos. Now some people sometimes will comment, well, some of those videos are a couple years old. Well, the wash sale rule hasn't changed. We are producing some newer videos, but there's really been minimal changes to wash sales over the past, especially since the 1099-B changed back in like 2012 to 2014, that range. So now things are pretty stable, and this information is still good for you, but also we're going to have some additional new videos that we'll be posting as well. So if you like watching videos, check that out. We've got some short videos that can kind of give you some of the quick lowdown on wash sales. Also, I mentioned trader tax status. We have a section on mark to market, Form 4797. It'd be good to check that out. We explain a little more about some of the qualifications for that. And we also have some links where you can get more information from some CPAs, tax professionals that really focus on traders and trader tax status. So great question.
Hey, got one more. What, as far as tax reporting goes for 2020, what can traders and investors expect to see?
Yeah, so far right now, I haven't checked today. So, but last week I know I was checking updates at the IRS, and it looks like there's not going to be any significant changes to some of the tax reporting as far as forms. The Form 8949, pretty much exactly the same. Sometimes the IRS tweaks little things in the format of the report itself, but what's required, no changes in the requirements for 8949, no changes with wash sale rules, anything like that. So with TradeLog, we usually watch here once we get into 2021, we'll monitor with the IRS. Once they have confirmed the final layouts of reports, we will release an update to TradeLog that will have the finalized reporting. So if you want to use our 8949 directly, but it doesn't look like we're going to have anything significant with any changes to the rules itself. Now, one question I've seen pop around a little bit, of course, last year, the federal government, they pushed back, they deferred the filing deadline from April 15th to July. So a lot of people took advantage of that. I haven't seen anything indicating that that's going to happen this year. So if you're thinking you're going to get an extra, several months to file, that may not happen this year. So you may need to start thinking about your taxes and getting that done by April 15th, or, go ahead and think about even filing for an extension on your taxes. And that way it gives you more time automatically.
Hey, great. Thanks, Jason. Appreciate that. Now, enough of talking about the IRS. What about TradeLog? TradeLog's been doing this for a long time, a couple decades. Anything new in the works with regards to the product itself?
Yeah, it's a good question. We could discuss a few things that we've got going on. As you mentioned, Les, wash sales, TradeLog's been doing wash sales for 20 years. And we haven't made a lot of changes because the fundamentals of wash sales have always stayed the same. One of the things that we're really looking at with the actual software, the application itself, is actually even giving some more fine-tuned control to you as a trader. So expect to see that here in the coming months, some releases that are going to help you with specific tax situations that you may have to be able to fine-tune wash sales. When you read some of the content online or listen to some of the other videos that I've done, I often talk about the fact that some of the wash sale rules are open to interpretation. And quite frankly, some experts have tried to get the IRS to really nail down certain things for years, but they won't. What is substantially identical? What's really considered a replacement position? So we recognize as a company that there are some different opinions with that. And so we're trying to empower you as a trader with the ability of, if your particular method of trading you think the wash sale rule needs to apply a certain way, we allow a little bit of adjustment with that while still trying to comply with the IRS requirements. So that's a change. We're also working on some user interface changes with the application itself that we're excited about. And another big thing is with our import, because of course TradeLog is importing your actual trade history from your broker, and we support a lot of different brokers. We're always trying to support as many brokers as we can, which is really quite a task because every broker is different. But some of the major brokers we're actually working with right now on our Broker Connect, which is our automated import of a more secure, stable API interface that's going to give us a lot more reliability. And I know some of our customers who are with us are probably, they know what I'm talking about because maybe they've seen some of the problems that we've had in the past trying to keep up when a broker makes a change to their reporting or to their website. But we're working with some of the major brokers right now on that API connection that we hope to roll out very soon, especially going into 2021. So we're excited about that, and definitely want our users to stay tuned to see some of those updates. I think that's all of them mainly that we, yeah, think so.
That's it. Yeah. Great coverage. Thanks.
All right. Well, thank you, Les, and thank you all again for joining us. We've got a great attendance today, and those who are watching this later, hope this helps you out.